So Plastics Capital is a consolidator of plastic products manufacturers focused on proprietary products for niche markets. So what does that really mean? Well, we make technically challenging plastic products which go into end customers' products. So we make a critical component, usually relatively low cost, but which is a component which has to work absolutely 100% in the end customer's products, otherwise it will fail. So for example, we make steering column bearings which would go into a car, so obviously they have to work all the time, absolutely correctly. And the thing that we do is making products out of plastics can be very challenging, and the reason for that is we're forming plastics, melting them, coalescing them. When they cool at different rates. So to get the technical tolerances absolutely right is quite difficult. The business was founded in 2002 by 3 individuals. You can see there Faisal Ramatullah, Richard Vesey and Arun Nagwani, who remain significant shareholders. Between them they own about 16%. The genesis of the idea for Plastics Capital came about as they were looking at large plastic corporates. And what became obvious to them was that 90% of what these corporates made was bog standard commodity products, fairly low margin. But in each of them, there was an element of their business which was very high margin, very niche, very attractive. And it was attractive because they were making, as I said, these technically challenging products which no one else could make. So what they thought was, well, why don't we concentrate on making a group which is just focused on these niche special products. So that's what they did. So over the course of 14 years, 10 businesses have been acquired and they've been formed together to make 4 key product groups which we have now. We bought our first business back in 2004 and our last business, which I'll come on to, back in 2014. We listed on AIM back in 2007. So currently the group has 5 factories in the UK, all over the UK, concentrating on each of the product ranges. 1 in Thailand, which focuses on our bearings business, making bearings which require a higher degree of hand assembly, so are less automated. 2 smaller factories in China and sales offices in the USA, Japan, China and India. Currently sales are approximately 50 million, with approximately 40% of those sales exported to 80 countries all across the world. And we sell through a variety of means, either through direct sales, through our own sales engineers or salesmen, or through a distributor network, which for one of our businesses, we have about 140 distributors through 70 countries. Currently the business has an EBITDA of approximately 6 million, and market cap, I think as of today, is around 31 million, with an EV of just over 40 million. The production and the skills of Plastics Capital is concentrated in the UK. So we have significant engineering know-how here, and that's been built up over the last 20 to 40 years. So all the businesses which we've acquired over that time frame have been around for many, many years. And with that, the knowledge and the expertise has been built up, be that through material formulations, special recipes, special production kit, or special tooling to actually make the products. And all this underpins the group's competitiveness and enables us to be the #1 global leader in 3 of our product ranges which we make. The group has approximately 470 employees, of which 300 are located in the UK and 170 are split across the world. So what do we make? So we have 4 broad product categories. We make firstly films. So this is high strength industrial films used for a variety of applications. So something like this is a bag made from a high strength film, welded on the sides and at the bottom, and for this one would be poultry feed. The advantages that we have here is that the vast majority of what we sell into goes into food. And there's a requirement, EU directive, that all food grade packaging now has to be made out of plastic. It was before cardboard and paper, but those are now being substituted for plastic film. This enables us to see significant growth rates. The films business in particular, the one focused on food, has grown at an average of around 7 to 8% over the last 7 years, and that's per annum. The advantage as well is that the films which we make are very strong, so they protect the materials that they are carrying, but they're also very thin, so enabling us to pass some of the cost savings on to the end customer. In addition, we have special production techniques. So one of the businesses which is focused on films is something called an inline production process. So what that means is plastic pellets come in one end, they get melted, they get extruded, the film gets created, the film then gets printed, and then it also then gets cut into shape and made into sacks. So that happens all in one process, and that's quite unusual. So that enables us to make bags and sacks very, very efficiently. The other business we have in this sector focuses on food and food grade packaging, and it's to be a food grade accredited. The principal qualification is to be an M&S approved supplier. There's 4 of those in the country, and one of our businesses is one of those. What that also means is that we have enabled our bags, which we make, to have special features. So we have patented features on them. So special opening mechanisms, pouring mechanisms, ability to make the bag so that a limited amount of food is entrapped in the corners, which is important for the manufacturer to keep that down to a minimum. The second product which we make is something called plastic bearings. So something like this. This is a turntable for a satellite dish, which would sit in the roof space of an SUV vehicle. It's made out of plastic. It has stainless steel ball bearings inside. And the advantages of this to the customers are that it's lightweight, so particularly for automotive, that's a crucial factor. By moulding plastic, you can add a whole load of features into the bearing, which you would not be able to do with a metal bearing. Also, it doesn't corrode, so there's many applications where we have plastic bearings which go into water environments, which you can't do with metal. And also, plastic bearings don't need any lubrication. So if you're making a plastic bearing, for example, in a poultry processing plant, so the chicken goes around the factory suspended underneath the bearing, you don't need any grease to lubricate the bearing. So there's no contamination risk for the food there. So the worldwide market for plastic ball bearings is approximately for metal ball bearings is approximately $20 billion. Plastic ball bearings, its market share is around 250 million. So, a significant potential of the market still to go for. Obviously, plastic can't substitute metal in all areas. Where load or temperature are crucial, plastic is not the right solution. But there are a number of opportunities where plastic is a much better solution than metal, and that's where we're seeing some good growth coming through. I mean, interesting enough, this business generates sales of around 12 million, and it's got business one, which has not yet come through into sales, of around £4.5 million, which should come through over the next 3 to 4 years. Our third product range is it's a technical plastic profile. It's basically a strip of plastic which is used to put the crease into a cardboard box. So when you want to make a cardboard box, you have a highly expensive box making machine, somewhere between £1 million and £2 million. So you want to make sure that you're using that machine all the time and it's working absolutely spot on. And this plastic strip basically enables the operator to set up his machine very quickly in the right geometry so that it fits for the cardboard box. You can do that within 5 minutes. He will use a plastic strip like this, which costs about £1, set the machine running. He'll make his box run of, say, 100,000 boxes, matrix which you set up, this plastic strip, he will then throw away, and then he will lay down the next geometry for the next cardboard box and start the process again. So this is a consumable and used box makers across the world. We are the number one supplier of this. There are two manufacturers in the world, us and a German company, and we sell this through, as I said, a distributor network across 80 different countries. We manufacture about 2,500 different SKUs. Why so many? Well, cardboard comes in all thicknesses, stiffnesses, and there's a variety of products which we make to enable people to crease that card quickly and efficiently. The final product which we make is something called a hose mandrel. It doesn't look much. It's a plastic rod, and effectively it's the forming agent around which you make this, which is in high pressure industrial rubber hose. So what you do is in your factory you have your plastic rod around which you wrap your rubber, your steel mesh, some more rubber, and you put it all in a vulcanizing oven which heats the rubber and the mandrel under high temperatures and high pressures, comes out of the oven, cools down, and then you extract the mandrel, the consumable, and then you're left with the hydraulic rubber hose. The mandrel which we make has many advantages over the existing system. So you can make very good rubber hose on metal rod, but then you're limited to the length of your factory. So you can make hose up to about 100 metres, 200 metres maximum. With our mandrel, it's flexible. So you can bend it around the factory. So suddenly the hose manufacturers can make this hose in 2 kilometre lengths rather than 100 metres, which gives them huge advantages. There are other manufacturers of this who make plastic mandrel. However, it's of inferior quality. It may last 2 or 3 times because it goes into the sort of high pressure oven, which would quickly break down the mandrel. Our mandrel, because it's used high grade engineering plastics, can last 40 to 50 times, which again provides the customer with great cost advantages. So, group characteristics. So we make, as you've seen, these 4 products. So they're highly engineered plastic products. So we've made products which have significant design and development content. So we own the IP, we've developed the IP, it's ours. That's come about through the 20 to 40 years which all these businesses have been in existence. The plastics which we make, they're made to our own special formulations. So the films we make, they're thinner, they're stronger. The mandrels we make, they're more bendy, they're more slippy to enable the hose to come off easily. The bearings, the bearings again are made of special materials which allow them to rotate smoothly and efficiently. The processes which we have employed, our production processes, they're our own. So we make our own machinery. You can't go out and buy it. We make it. Again, there's years of development and technology gone into that. So that provides us with a good degree of protection, a good barrier to entry. We have long-term customer relationships. We have been a supplier to a number of our major OEMs for the last 20 years, if not longer. So we supply people like Nexteer, who make the steering column bearings. We supply to Ricoh, who make the photocopiers. Siemens for bearings. So we've got a good list of OEMs who we've been supplying for a long time. We work very closely with those OEMs, so we come up with design solutions for them, working very closely with their team of engineers to work out what the best methods are for our plastic solutions into their end products. And that ties us in very closely with them. In particular, we are integrated into their business systems. So as I say, their engineers work with our engineers. In some cases, for the films business, we will manage their stock for them. We will say, we will look after your film stock. You will never run out. Leave that to us. Global reach. We sell to, as I said, 80 countries around the world, and 40% of what we make gets exported. And 20% of that is to emerging markets, with focus on China and India. And what we are seeing there is as they become more technologically advanced, the requirements for mandrels or for creasing matrix is increasing all the time. And there is excellent organic growth potential. Plastic is substituting other materials, particularly metal, which drives our growth rates. Our customers are always coming to us saying, we require further product innovation. Can you help us? We have the solutions, we have the techniques to enable them to benefit from that. And we have a strong new business pipeline. We have, as I said, about £4.5 million of sales just on the bearings business side, which we've won, which is not yet converted into sales, but which will convert in the next 4 to 5 years. And there's further opportunities coming all the time. Looking at our medium-term financial KPIs, you can see there the metrics. So annual sales growth, so the compound annual growth rate of the last 6 years has been just over 5%. EBITDA margins, we make very good margins. That's averaged 15.6% over that time frame. Cash conversion is good. The business throws off a lot of cash. So from that, I mean from EBITDA down to operating cash flow, that conversion rate has been 71%. You know, we don't need to invest a lot back into the business in terms of CapEx. Working capital is well maintained. We don't need to hold lots of stock. And we manage our tax rate efficiently as well because we benefit from the R&D tax credit. Annual EPS growth, compound rate of 12% over the last 6 years. Return on capital, you see over 20%. And dividend yield, as of January the 20th, was at 4.6%. So we've seen our dividend increase by a penny a share for the last 4 years. And net debt leverage, as of the end of September, stood at 1.8 times EBITDA. We're comfortable with our EBITDA net debt leverage around the 1 to 2 times. So we're at the top end of that, but with the amount of cash that the business throws off, we will continue to de-lever quite quickly. And interest cover, that's EBITDA divided by our interest charge at over 12 times. So again, comfortable gearing levels and very good interest cover levels. So the final slide, so the reasons to invest in Plastics Capital. You know, we are a solid company. We have been very resilient throughout the financial crisis and subsequent downturns. We continue to generate good levels of cash. The order book continues to look good. We remain very profitable. Attractive dividend yield, you can see it was at 4.6% as of the 20th. You know, I envisage that will remain the case. Good organic growth potential across all businesses. We see growth rates of between 5 and 10%, which can be achieved. And already, as I've alluded to on the bearings business, some of that is already being realised. And we have a good acquisition pipeline of opportunities. It's either standalone businesses or either bolt-ons, which would fit very nicely into our existing businesses. And we have a good track record of taking those acquired businesses, professionalising them, and turning them into great businesses. Thank you.